I'm Charlotte McLeod with the Investing News Network, and here today with me is Gregor Gregersen, founder of Silver Bullion. Thank you so much for joining me online today. It's great to have you here.
Thank you for having me.
Really nice to be speaking with you. And, since it is our first time talking, I thought we could start out with a little bit on your background. I'm curious about how you started Silver Bullion. I was reading a little bit on your website. It sounds like you made a move into precious metals after the 2008 financial crisis. So, what can you tell me about that?
My background, I started off in finance and economics, and I went into software development. By 2008, I was working as a senior data architect for Commerzbank. That's a big German bank. And Lehman Brothers went bankrupt, and I was in the trading room, and I saw the consequences of, that bankruptcy. And essentially, I saw the financial system was coming to a halt. It was a big realization that really a lot of what we do is based on trust. And if that trust is not there, and that's what happened post-Lehman, essentially things come to a halt. And we are really moments away from things going really downhill. And it made me realize how fragile the financial system is. And, some quicker people went out and bought physical silver and gold. And by the time I scratched my head and thought maybe that makes sense, I couldn't find any physical metal anymore in 2008. And that got me very interested in the subject. And so the idea with physical metals that you don't have counterparty risk, and the realizations that we're going to have a much bigger financial crisis coming in the future, currency crisis, not systemic risk like that, sort of hit me like a sledgehammer. And it just made so much sense to buy some physical metals. And at first I didn't think to really go into the business, but when I moved back to Singapore, where I had been living at that point, there wasn't anybody selling physical silver. So I figured out how to get some metal into Singapore. I essentially put it under my bed. I built a website because it was my background with live pricing, live inventory, and I would meet people literally at the train station, selling 3 bars of silver, getting $6,000. And it was a kind of market test. I mean, see if anybody was really as interested as I was in the metal. And after about $800,000 in sales, I realized that there is demand. It's time to get an office. It's time to get somebody to help. And that was about 14 years ago. Since then, we sold about $1.6 billion worth of precious metals. We're storing about $1 billion worth of metals. At our vault, we ran out of space at the vault, and we now are building a much bigger vault. And so it was pretty much a journey which, to me, seemed to be doing something which just seemed to be common sense, but somehow ended up from selling some bars, meeting people at the train station to where we are now. And yeah, it was quite a surprising journey how it all came together.
Yeah, very interesting. And we'll come back to that much bigger vault that you're building. But before we go there, just given that story, I have to ask what you think about the banking crisis that we're seeing right now. I think a lot of people are wondering what's next. Is it over? Is there more to come? What are your thoughts?
There's a lot more to come. I mean, when you refer to the banking crisis, I assume you mean Signature Bank and Silicon Valley Bank and so on. Credit Suisse. Essentially, these banks were expecting to be in a recession. And in a recession, it sort of makes sense to buy long-term bonds, which is what they did. And I guess they didn't expect inflation to start going up. And so as inflation started going up and interest rates went from 1% to, say, 5%, the value of these long-term bonds ended up falling very, very quickly. And we have to remember that during COVID, the United States had something like $3 trillion worth of deficits, which means they issued a lot of these long-term bonds, and banks like Signature Bank bought them thinking they're safe. I mean, they're governmental bonds. What can go wrong, right? Well, all it takes to go wrong is for interest rates to be going up because of inflation. And then the value of these bonds are starting to go down. And, we always need to remember a bank usually only has about 10% of depositor money that they keep in money. So as a 90% is going to be used in some other way through fractional reserve banking. It's going to be increased multiple times to make out loans. And so once depositors start taking some of that money out, suddenly there's that realization, oh my God, my bonds are actually much lower valued than they are, and the bank will have to start selling some of these bonds, taking on the huge losses that they have. So that's essentially what happened. And as depositor got nervous, they started withdrawing these funds. Now, the issue is that this isn't just an issue for Signature Bank and Silicon Valley Bank and so on. Pension funds, insurances, other banks. I mean, everybody bought these sort of loans because they were used by over a decade of very low interest rates. They didn't expect things to be going up. And maybe they didn't quite understand the risk of what they bought. But this is a very widespread sort of problem. And so it just reflects the increasing fragility of the financial system. And it does seem that to avoid financial contagion, the government will just keep on bailing out these banks. The question is, if they keep on bailing out banks, at what point are we going to start questioning what the value of the US dollar really is? And that's another subject.
That is a big topic right now. And it's one that I've been hearing more and more about, this trend toward de-dollarization. And I think that, definitely people are talking about it, but it is really hard to picture how that might actually play out. So I wonder if you have any thoughts on that note. So I know it's a big topic, but let's see what we can do.
Yes. So my background, I'm quite international. I originally German. I grew up in Italy, spent 12 years in the US. Most of my education is from, San Diego State area. Then I moved back to Germany and then Singapore. So I got to see different parts of the world. And, the US policy for many, many decades, very successful policy, has been to carry a big stick and talk softly. And the big stick was the military, but it was also the controls the United States has over the worldwide banking system. The reality is that if the US says jump to any bank, the bank is going to jump because they can threaten the bank to not allow the bank to use the SWIFT transfer system, be cut off from the financial system, and essentially go bankrupt. So whatever the US says has to go. The problem, so, is over the last, I would say, maybe decade or so, the US has increasingly used that power. It's no longer talking softly. Sometimes it's plain out yelling, and taking over a lot of things which people don't feel they ought to be doing. I give an example. In Germany, for example, also the European Union in general felt that the Iranian nuclear treaty with Iran was actually something that ought to be continued. The Trump administration thought that shouldn't be. And once they put sanctions on Iran, all German and other European banks had to follow US sanctions. And so basically, the foreign policy decisions of Europe didn't matter anymore. The US decision was going to go. And so, Europeans sort of felt like, don't we have a mastery over our own decisions and what we should be doing in foreign relations? The answer is no, you don't. Because you don't control the banks, the US does, ultimately. Another example of that is, in Hong Kong, Carrie Lam is essentially the equivalent of the president of Hong Kong. And whether you agree to it or not, I mean, we had sanctions placed against us, the US did. HSBC, which by the way stands for Hong Kong and Shanghai Banking Corporation, had to close a bank account of Carrie Lam. It's like telling Bank of America to the president of the US, you can no longer have a bank account, sorry. And so she had to do everything in cash because HSBC was at risk of losing that connectivity to the SWIFT system. So as a country, you feel you no longer have control. It feels like an invasion of the sovereignty. And so because of these reasons, there's an increasing want to sort of move to alternatives to the US dollar. And this has been going for a while, but it's accelerating now. For individuals as well, if you're a Russian and you were vacationing in Turkey, for example, and you had a MasterCard or a Visa when the invasion happened, you will find that your MasterCard doesn't work anymore. But if you had a Union Pay, which is a Chinese equivalent, it would work. So the lesson suddenly is you want to diversify. You want to have a MasterCard, but you also want to have a Union Pay because the financial system is getting more and more political. And so that's a big driver towards this idea that people want to have choices and not be completely reliant on just the US. So that's what I think de-dollarization is about quite a lot, but it's been going on for decades. I think it's just the media is sort of picking up on it more now, and it's become more of a hot potato of debate. But it's been something that's been going on for at least 15 years or so.
Right. And so all of these are factors that people are seeing. They're seeing them in the media. They're hearing them talked about more often. Are you seeing these topics translate into more buying of precious metals at Silver Bullion? Are you seeing people becoming more interested in having that diversification? Or do you think that's still to come? What trends are you seeing there?
It definitely increases. I mean, when Signature Bank and so on bankrupt, I mean, our sales went up 300-400%. And after that increase, we usually saw bigger average sales as well going on after that. COVID was another event, which really pushed up sales, and average sales after that also stayed higher. So precious metals, they're intrinsically valuable. They're non-political store of value. So as people get more and more worried about what tomorrow might bring, it just makes sense to buy something like gold or silver. And, of course, you want to keep some for yourself, at home. But there's also a point to be made that storing some of that outside your jurisdiction in a safe place does have a value. And that's essentially where we are coming in. A lot of clients that we have are from the United States. A lot of clients are worried about a nationalization of gold, as happened back in 1933. And the thinking is, if a country, is very reliant on the currency, if people don't trust that currency, a country will need to create a new currency, and that currency will have to be backed by something people can trust. And gold and silver will always play a role, in that new currency. And so the fear of a repeat of the 1933 nationalization, is quite a real one.
Yeah. Okay. So there's a few things that we could probably pull on there. Why don't we talk about that gold confiscation angle a little bit? Because I know I see in our comments section on our YouTube channel, people do worry about that. So can you say a little bit more about whether you think that's a real concern that we should have right now?
Um, it is a concern, and this time around, it's for different reasons than in 1933. I mean, in 1933, the problem for the U.S. government was that the dollar was backed by gold, and citizens were able to redeem the dollar for gold. So, if the government will start printing large amounts of money, people could just say, "Well, keep the dollar, give me back the gold," and it really created a constraint for the government on just issuing currency. Um, so they said, well, why don't we just make it illegal for people to own currency, and we can then print as much as we want, and say nationalize the gold, I believe for $25 per ounce, and they revalued it around $33, and since they kept it like that, now they started printing more and more currency. Countries like France were still able to redeem. They said, hey, you create a lot more dollars than you have gold. Why don't you take back your dollars and give me the gold? And that's when basically Nixon closed the gold window and said, okay, we're no longer backed by gold. So that's what happened in the past. Now, the US dollar is no longer backed by gold, but the amount of money printing, the amount of debt creation is at record levels multiple times over. And I think we could argue that it's not sustainable. And so the question is there going to become a point where people start questioning the value of the US dollar? If so many trillions are being created, if we keep on bailing out these banks, what is $20 worth? Is it really worth 1 hour of my time working? Should I be paid $30 maybe, or $40? And once people start asking these questions, That's the beginning of potential hyperinflation. That's usually how it started. It has something to do with how much money you spend it, but ultimately it really comes down to the confidence people have in the currency. And so if we go down that route, and if the value were to start falling very quickly because people start having doubts about it, then the US government will have to do something. And, if we look back at the Weimar Republic, that was Germany essentially between 1918 after World War I to 1923, we had hyperinflation. And the way we ended up getting out of it is that the government made a new currency, used all of the governmental assets to sort of use that as collateral as well as gold, and eventually went back to a gold-backed currency. And that's what restored confidence in it. So if we look at history, there's a chance of that happening again. And if your government, most likely you will want to get your hands on as much gold as possible. And remember, the 1933 nationalizations, that was an executive order. That did not go through Congress. It was the president who signed this, and within 2 weeks, everybody had to turn in their gold or face a $10,000 fine, which was a lot of money back in 1933, or up to 10 years in prison. So these things can happen pretty quickly. And I think there's a real chance that can happen again.
Okay, and I think that makes a lot of sense. That will help people understand, because you're right. People do tend to hear, okay, you buy your physical precious metals, you want to keep it relatively close to you, but there are cases when maybe you don't want to do that. So let's talk a little bit more about your setup in Singapore. So right now, I believe you're in the midst of renovating a new vault. I believe it's going to be the largest silver vault in the world by capacity once you're done with it. So I'm curious to hear about that project, the logistics behind it, and what features of it you have connected to it for security and things like that.
Yeah, I mean, that's a long subject. I can talk for hours about it. The reserve is 180,000 square foot facility. It is a very special sort of layout because it was hosting a big logistic machine, about 100 feet in height, 20,000 square feet sort of room. And this main vaulting area, which is going to become a main vaulting area, has a 90 kilonewton floor loading. Now, the reason why that is significant, if you're going to store large amounts of gold or silver, now gold is easy to store because it's so valuable. But with silver, you need about 80 to 100 times more physical space, and you have about 85 times more weight that you need to carry for the amount of value. So if you want to store a large amount of silver, you need to have a really strong floor. So this building is unique in that we have a 90 kilonewton floor, which your average car park is 2 kilonewton on average, which means this floor is 45 times stronger than a car park structure. And that means we can put 9 tons of silver stacked one on top of another, which makes it about 12 meters, which is close to 40 feet high. And that gives us a very, very high efficiency of storage, which enables us to store 10,000 tons in this room alone. To give you an idea, 10,000 tons, that's say around 320 million ounces of silver. That's 2.5 JP Morgans. That's more than all the silver in COMEX, I believe. So we are doing something quite unique, which is basically taking high efficiency logistics systems as well as vaulting technologies, putting it together and creating this bulk storage capability. In addition to silver, we are planning to store metals like indium and germanium. These are metals valued around $500 per kilo, similar to silver. They're very high value industrial metals. And in a place like Singapore, as there aren't really many storage facilities that can store it because insurance wouldn't allow it to be in an unsecured warehouse. So we're planning to fill this capacity with not just silver, but indium, germanium, and so on. Gold, on the other hand, will usually be stored in what's called UL+2 vaults. They're essentially 20 centimeters thick, composite steel walls, with each vault weighing about 30 tons or so. And it's equivalent to about 3 meters, almost 10 feet of concrete, reinforced concrete from a security point of view. And we are setting up 15 of these vaults. We are using one larger ones. 10 are essentially up for rental to either banks as a bullion dealers or ETFs, institutions like that. And 4 are specifically for art. So we have been licensed to have auctions. It's a bonded facility, so it's tax-free. We are looking to hopefully be able to work with Christie's or Sotheby's or Phillips, some of the auction companies. At the second and third floor of the facility, we'll be hosting art as well. So it's this combination of capabilities, luxury goods, gold and silver, as well as art, is creating a type of synergy where some people, for example, in Singapore, there's a lot of interest for watches, high-end watches. And I always say for every person who's interested in gold, there are probably 30 people interested in watches. And by having some of that, we can essentially get the watch aficionado into the facility and hopefully get them interested in gold and silver as well. Because I think their gold and silver is vastly underappreciated, in general. So these are all ways of sort of getting people to see or get interested in the whys of precious metals, especially at a time where we are now. When it comes to security factors, when you build a vault, what you would normally do is you go speak with the species inspectors of the insurance company. For example, we have a $800 million anyone loss policy through Lloyd's of London. And these policies, if you build a vault, you would normally want to go back to the insurance company. The insurance company sends you a species inspector, which basically is an expert in security, which is also specific to countries. For example, in Singapore being a very safe place, the requirements are a bit different from, say, Colombia. So they will basically do an analysis. They kind of tell you what they expect, what they wish, and where the major concerns are. And we've been dealing with these species inspectors for about 10 years now. And in a place like Singapore, the primary concern is in internal processes. So, for example, how do you make sure when 5 bars of gold come that everything is sort of procedurally done correctly without there being mistakes, without the chance of inside jobs, and so on. And that's where we spend a lot of effort into creating a vault management system, which splits the staff inside 3 different functional. We have secure logistics, which are people who interact with clients. We have vault operations, which only deal with the physical items inside the vault. We have security, which is actually handled by armed auxiliary police in Singapore. And these 3 groups, when a deposit happens, that deposit is split into 10 tickets, which are being bounced back and forth between the different groups. And only if you fulfill one side, you get the next. And this process essentially provides a very high level of reliability, increase a lot of comfort and speed inspector, which then allowed us to get, insurance which covers theft, inside jobs, as well as mysterious disappearance, which usually is not covered in. So that's, a key part of it. And then the other part, which I think a lot of people think about when they talk about vault, is about the physical security. From that point of view, I can tell you that a key aspect of security is not to rely on any one system. So that's a building security, since there's a separate vault security, which are completely separate systems installed by different people, ran by different people. And you have the usual sort of type of sensors, which will be motion sensors. You have vibration sensors. You have lasers. You have contact sensors. These are typical ones. And since they're wired together in a way that you have redundant alarm systems going to different parties, especially at night when the thing is being locked down. And then you have a response time. And the response time, is, let's say, well, so basically is 24/7 armed security on location. But then let's say police response time will be from around 5 to 6 minutes. And when it comes to silver, silver is not that easy to steal. We mostly store 1,000 ounce a good delivery bar. It's at 32 kilos, very hard to run away with. Um, and you really cannot get them out from 12-meter high racks. So really, it's more about the gold that you have to worry about, and the gold is in these tattoo vaults, which I mentioned earlier, which are essentially rated for a 1 hour, period of time for somebody to get in, unless they have anti-tank weapons, in which case it will be very loud. Um, so these are the sort of features that are coming in. When it comes to access security, when you want to go to a vault, from the time you're down in the street to the time you're going inside to where the vault is, you have about 9 different doors you have to go through. And you have to go through 2 man traps. And man traps essentially are setups where one door opens, you go in, the other door doesn't open. And if we don't like you, we don't reopen the door. Oh, then you get stuck. So oftentimes, this is sort of the type of real world securities that you have out there. Because, yeah, I've had armed people, but usually in a place like Singapore, it's very hard to have armed weapons. Gunfights and so on are very, very effective. And if you have, these man-trap setups, essentially that's where a lot of security comes from. So these are some of the things that are coming to mind, when you ask me about security. But if you have more specific questions, let me know.
No, that was great. Clearly this is a massive undertaking, and I think people should be feeling very safe about any metal that they might have there. One thing that did come to mind as you were talking through how the vault looks is, the sheer volume of silver compared to the gold. And I wondered if you might have any comments to make on people when they're building their portfolios of physical precious metals, how they might want to divide them between gold and silver and things like that, because that could be useful for everyone to hear about as well.
Yeah, so almost all my personal wealth, besides the business where, of course, I'm spending most of my time, it's in silver, not so much in gold. And there are a couple of reasons behind that. One key reason is the gold-silver ratio. If you've never heard about it, I really encourage you to look into it. But essentially, the principle is pretty easy. You look at how many ounces of silver you need to buy 1 ounce of gold. And you will find that over the last 50 years, that ratio has sort of bounced back and forth between, say, 50 and 80. So when you're at 80, it means silver is very cheap because you need a lot of silver to buy 1 ounce of gold. When it goes down to 50, it means silver is relatively expensive compared to gold. So right now we are around 83, which means silver is very cheap. So for people who want to buy gold, I kind of tend to tell them, well, buy silver first, wait for this ratio to sort of go back to its mean around 60 or 50 and switch back into gold, and you'll end up 50% more gold. It's a very simple rule. If you were to follow it over the last 40 years, you would have quadrupled the amount of gold or silver you're holding. You would have probably made one trade every 4 or 5 years. And you're essentially buying whichever metal is cheaper compared to the other one. So it works very well. And so right now, that ratio is streaming towards silver rather than gold. The other thing I really need to point out about silver, I was just actually talking to Bloomberg about it yesterday. There is a lot of industrial demand coming for silver, especially photovoltaics, solar panels. So over the last decade, we had a huge run-up of solar panels installations, but at the same time, these solar panels have used less and less silver. So over the last decade, there was a reduction of 80% of the amount of silver used for each panel. So even though we had a big increase in solar panels, the amount of silver used didn't increase nearly as much because it became more and more efficient. But we now reached a point where you really cannot decrease the amount of silver in each panel much anymore. They've been trying to use copper, but the problem with copper is that it doesn't stick very well. It comes in the pace that they need to create. And so the lifetime of the panel ends up being 4 or 5 years instead of 25 years. And the companies which went that route, like some take 7 years. So really, you cannot switch away from silver. You cannot make the panels more efficient. And if anything, some of the new technologies coming out need 30 to 80% more silver. So the amount of silver per panel is likely going to increase instead of keep on decreasing. And the amount of panels that are going to produce this year and next year is going to be going up greatly. Those are studies stating that there will be more money spent on photovoltaics than oil production. So starting this year. And the production last year was reduced because there was a shortage of polysilicon, especially in China. This is one of the key materials you need. But they produce so much polysilicon now that they actually have too much of this stuff. And so that solar panel production is going to go way up, and that's going to create a lot of demand. So now, having said that, in 2022, if we look at the Silver Institute, we had deficit of silver of 254 million ounces. That is huge. Yearly production was around 1,000 million ounces. And when we say production, that includes recycling and everything else. And demand was over 1,250 million ounces. So we're around 22, 23% deficit in silver. And if you look at about the amount of silver that we have in stock, in 3 years, if it keeps us up, we're running out of physical silver. So it's a very, very bullish signs coming from industrial production. Silver is a lot cheaper than it ought to be on the gold-silver ratio basis. On a historical basis and in nature, the ratio between gold and silver is 15:1, yet it's being traded at 83. So so many things going for silver that you really can't do much wrong than buying silver. I have no idea what silver price will be next week or next month, but over the next years, I expect the price to be a lot higher.
Yeah, that's exactly what I was going to ask you. People hear these projections for demand and deficits in the silver market, and they want to know what's going on with the price. But I know that's can be very tricky to predict.
There's one important thing to understand about price. The price of silver has very little to do with physical supply and demand. The price of silver is determined in future markets, such as COMEX. And so in a future market, if I'm a bullion dealer and I'm selling $1 million worth of silver, I'm going to buy $1 million worth of new metal coming in, and that probably is going to be locked in by somebody in the future markets. But somebody else might come and put $1 million in shorts, leverage it 10-1, and you basically create $10 million in selling demand of silver, which doesn't exist. So the price of silver really is determined in these financial markets, and it doesn't really reflect the amount of supply and demand that there is. And as long as I can pick up the phone to a mint and say, I want to buy silver at $23 an ounce, that is indeed the price of silver. But if at any point in time I pick up the phone and cannot buy it, I no longer trust that price. If industrial users like Intel or all these other ones cannot get the metal, suddenly all hell is going to break loose. So I think one way or another, silver prices are going to have to increase as the amount of physical is going to decrease, and prices are going to have to go up. A short term, very hard to tell. Silver kind of does its own thing in defying sort of supply and demand expectations, but longer term, you will see supply and demand sort of assert itself, and you will see higher silver prices.
All right. Well, we've covered quite a lot of ground today, but before I let you go, I wondered if there's any final thoughts that you would share on silver, gold, precious metals in general with our audience.
So I think it's very important for you to put a little bit of your wealth in assets which are apolitical, which are not dependent on some countries on what they do and they don't do, that are intrinsically valuable and that you can own outright, which are not dependent on a bank or some other entities that you have. it's very important that you understand the difference between paper silver and physical silver. Because most people will buy some contract or savings account or something else, and they think there's silver behind it because they didn't read the small print. And I mean, who does really want to read the small print? But um, oftentimes that you're buying a promise. And if that company goes bankrupt, if that bank goes bankrupt, there won't be anything there. If it's backed by COMEX contracts, again, you're taking a lot of risk. So I really urge people to make sure to buy physical bullion, because when a crisis comes, it will always be worth something. It will probably go up in value by a lot. And I do believe that the way we're heading, so we will have a crisis at some point. And it's very important that you have a base amount of wealth that's going to be there no matter what. And there should be some gold and silver under it.
Okay, I think that's strong advice to end on. Thank you so much for coming on today to talk about gold and silver and everything that's going on at Silver Bullion as well. This was really interesting.
You're welcome.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gregor Gregersen with Silver Bullion.